Let's be clear. Some people have maybe misunderstood or misinterpreted our story today. We're not in any way blaming the quants for this huge sell-off the last few months. There are tremendous fundamental reasons, as you guys discuss every day, and they did contribute to the placid markets that we've seen in recent years. And obviously, markets were volatile before the quants and after the quants. But they are a bigger part of the market, as we discussed in the story today, and a big component for a lot of quants, not all quants. There are all kinds of different machine-type traders, but a lot of them have momentum as an important input, especially CTAs, and they're bigger than ever. And yeah, they're selling, they're accelerating things, and it hurts the small investor if they're kind of short-term in orientation.
Bob, I know lots of guys there on the trading floor are not, let's just say, not exactly thrilled about the algorithmic trading and the machines that are account for 85% of trading right now these days, right?
Yeah, they got disintermediated. And if you talk about algorithmic trading of any kind, it's really 100%. Even somebody who types in, I want to buy 100 shares of IBM through an E-Trade broker is going to be using an algorithm ultimately. Look, 25 years ago, the buy side bitterly complained that the specialists down on the floor were too slow, open outcry was too slow, we needed to move the markets along a little faster, it was inefficient, and they got what they wanted. We brought in Reg NMS, we electronified the market essentially, and now there's lots of complaints that it's moving too fast, so it goes from one end to the other. And I know it's disconcerting when all of a sudden you get a 500-point drop in the Dow in 4 or 5 minutes. But the fact is, if people want to sell, they're going to sell. And when you have an October, when you have all of a sudden, you've got concerns about the Fed raising rates, trade wars, and a slowing global economy, people will find a way to sell, whether it's through a computer or throwing rocks on the floor at each other. When they want out, they're going to get out. Yes, it moves fast and it's disconcerting, but it's not that much different than it used to be a long time ago.
Yeah, Greg, is there evidence that it's more volatile these days? Look, and again, if it moves more than is justified, that should be an opportunity for people to say, hey, the stock is too cheap and I'm going to buy it, or maybe vice versa. So, what should people be afraid of? What is the big concern as far as you're concerned?
Well, obviously, you worry about a quant crash, which happened abruptly and quickly and can be blamed on the computers. But Bob makes a really good point that in some ways they add liquidity, they help the market. It's important to keep that in mind, and also take a step back. Why are there more quant hedge funds? Why are they bigger than ever? Why are investors shifting to them? Because everybody else, many of whom are blaming the quants right now, have underperformed for years. And also, we all acknowledge behavioral economics and the mistakes that investors make, both pros and amateurs. And the idea is that using a model with preset inputs perhaps can handle those kinds of issues a little bit better. So there are a lot of good reasons why we've shifted towards this type of investing, but there are downsides. They accelerate, to some extent, trends that are already in place.
Yeah. You know, Greg, it occurs to me that these computers were not introduced to the markets just in the beginning of October when this decline began. Nobody was complaining as the market was going up about computerized trading, which is, human nature, right?
That's exactly right. So again, the last few years, remarkably placid. And again, you don't want to give all the credit to the quants for that. You don't want to give all the blame to the quants today. They do accelerate existing moves, I would argue. There are some mean reverting type strategies, all kinds of quants out there. Stat arb is a huge part of the market. But a lot of those kinds of people don't trade when there's a crazy market, when there's volatility surging. A lot of the people that would tend to buy, they're programmed to take a step back. So again, it does add to the volatility.